Thank you for standing by and welcome to the APN Property Group Limited FY19 results conference call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Tim Slattery, Chief Executive Officer. Please go ahead.
Thanks very much. Welcome to APN Property Group's 2019 results call. I have here with me Michael Growth, our current Chief Financial Officer, and Mr. Joseph Duranga, our incoming Chief Financial Officer. So look, just to start off, our team has delivered another year of strong results. Our statutory net profit after tax was $14.5 million for the year, which is a 7% increase over 2018 and represents 4.67 cents per share. And our key management profitability measure, which is operating earnings after tax, was up 12% for the year to $9.2 million. Importantly, looking at the composition and the quality of the results, over 99% of our income for the year was generated from recurring sources. Funds under management was up $127 million of the year to $2.9 billion. And on the strength of the results, as well as the outlook, the board is determined to increase our final dividend for the year by 50% to 1.5 cents per share, which will be partially franked, which takes our full year dividend to 2.75 cents per share, which is a 22% increase over 2018. APN's balance sheet remains in excellent shape with $15.7 million of cash and net tangible assets per share of 42.2 cents per share, an increase of 7% over FY 2018. So moving to slide 3, 2019 has been an active year right across the business with our securities funds to start with, and the APN AREIT fund marking its 10th anniversary of its operation, and it's now delivered 14% per annum since its inception with continued strong income-based investment performance. And pleasingly, the APN Asian REIT fund has seen strong net inflows over the course of the year to $45 million at balance date and delivering 15.5% per annum since inception. In our listed funds, Industrial, which is our listed office and industrial REIT, delivered strong operating earnings growth at 3.8% for the year, which reflects over 50 individual leasing transactions and 13,700 square metres of space for 87% tenant retention. Industrial also successfully acquired $65 million worth of Victorian industrial assets and a very well supported equity raising transaction and associated debt refinancing. Convenience Retail REIT delivered strong earnings growth of 6.4% over 2018 annualised, as well as NTA per security growth to $2.96 per security, which is an increase of over 8% since it listed in 2017, and the fund continues to be well positioned. In our direct property division, we remain active but also disciplined and value focused, and we completed $78 million of new property syndication transactions, including the $24 million APN Narra Fund syndication and the $54 million recapitalisation of the APN Regional Property Fund and associated equity raising. So I'll now pass over to Michael for some remarks on our financial results.
Thanks, Tim, and good morning to all. It's worth taking a moment to reflect on the performance of APN over the past 6 years and the returns for shareholders through some of the key metrics we measure ourselves on, as set out in slide 4. Recurring income has grown from $12.2 million in FY14 to $26.2 million for the year ended 30 June 2019, a compound annual growth rate of 16.6%. This has outpaced the compound growth in our funds under management of 11.5% per annum, as we have been able to unlock the ancillary funds and property management revenue streams and have grown our co-investment business model. Over this same period of time, shareholders have seen their initial investment grow over threefold, while dividends paid have increased 1.5 cents per share to 2.75 cents. Turning our attention to slide 5 and APN's FY19 results. Operating earnings per share increased 12% for the year to 2.94 cents per share. This is a strong result in the current environment and is off the back of continued growth in net income and tight operating cost control, reflecting how we have been able to use our existing management platform and cost structure to deliver additional revenue for the group efficiently, effectively achieving an incrementally higher profit contribution for each additional dollar of revenue received by unlocking the inherent scale benefits available to specialist fund managers. On the revenue front, net funds management income grew 4% over the period, reflecting higher average FUM across our platform following recent property acquisitions by APN Industria REIT and APN Convenience Retail REIT in particular. Co-investment income grew $8 million grew to $8 million as the group invested further capital in APN Industria REIT and received a $1 million profit distribution from its co-investment in the APN Stellar Development Fund. Operating costs decreased $0.3 million to $13.8 million for the year, primarily due to lower share-based incentive scheme costs and tight cost control across other expenditure items. Moving to slide 6, the group is well capitalised and positioned for future growth with a strong balance sheet, minimal debt and a healthy available cash position. Net tangible assets increased 7% to $126.1 million or 40.2 cents per share, following favourable mark-to-market valuation gains on our co-investment stakes, primarily in respect to our listed co-investments. We have continued to successfully execute our balance sheet recycling strategy, actively deploying and then releasing capital to support the growth of our funds management activities. The current year was notable for the syndication of APN's Woolworths HCG South Nowra property as a new unlisted property fund, where the proceeds realised were recycled to support the recapitalisation of the APN Regional Property Fund, extending the term of this fund for a further 5 years. Good progress in selling down our co-investment in this fund continues, with a further $1.7 million of cash released subsequent to year end. I'll now hand back to Tim to run through the operational highlights of the group.
Thanks, Michael. So turning to slide 7 and a few brief comments on each of our operating divisions. In our securities funds, we continue to deliver on our proposition for investors of delivering lower risk commercial property income streams with consistency. Our largest fund, the APN REIT fund, currently has a distribution yield of nearly 400 basis points above the cash rate and offers investors monthly income payments. We now have a 20+ track record in this space, and over the course of the year, we successfully transitioned the leadership team to Pete Morrissey, retaining strong independent research ratings across the funds in this part of the business. Our funds under management for the year increased to $1.684 billion, as you can see on the bottom right hand panel, reflecting $65 million of positive market movements, offset by net fund outflows of $53 million, which we attribute to some challenges in the distribution channels associated with the Hayne Banking Royal Commission impact, as well as some profit taking as a result of strong REIT market total return performance over the course of the year. On slide 8, as of today in publicly reported information, I'm pleased to advise that the APN Asian REIT Fund now exceeds $50 million in funds under management, which reflects a very strong year of performance, delivering a 28.9% return for the FY2009 financial year and 15.5% return since inception in 2011. We continue to see the Asian REIT Fund as well positioned, offering investors a relatively high distribution yield, as well as access to the growth markets of Asia, backed by a high-quality commercial property portfolio. Turning to slide 9, our ASX-listed industrial and office REIT, Industria REIT, reported its results yesterday, including an excellent set of leasing outcomes and earnings results, which has been driven by a highly active management approach across the portfolio. Its earnings or funds from operation increased 3.8% to 19.2 cents per security, and Industria successfully acquired $65 million of Victorian industrial assets over the period with a very well supported equity raising of $50 million. You can see with gearing at 30% and a weighted average lease expiry in excess of 6 years that Industria remains well positioned for further growth. You can see on the bottom right-hand panel on the slide that illustrates Industria's growth profile over the last 5 years, and you can see that Industria and its current trajectory remains well on track to be a $1 billion fund with its market capitalisation in excess of $500 million and as a member of the ASX 300 index now. APN Convenience Retail REIT on slide 10 has delivered a strong earnings growth of 6.4% over 2018 annualised, as well as net tangible assets per security growth of 9 cents per security to $2.96. The fund has acquired a $7.3 million asset in the period on a 6.75% cap rate with a 15-year lease and remains well positioned for growth. We continue to be pleased with Convenience Retail REIT's cost of capital and its strong security price performance on the ASX, and we think that the fund remains well positioned with 100% occupancy, a cash distribution yield of 6.5% with continuing growth, a weighted average lease expiry of 11.7 years, and gearing in the low 30s. In our direct property division on slide 11, our key achievements for the year included the successful completion of the APN Stellar Development Fund, which has delivered investors an equity IRR in excess of 17%. The successful syndication of the $24.2 million APN Nowra Property Fund, which offers investors a 12-year weighted average lease expiry and a forecast FY20 distribution yield of 8%. As well as the 5-year extension and recapitalisation of the $54 million APN Regional Property Fund. On slide 12, we've sought to outline our overall direct real estate fund investments, and there's just a couple of comments to make here. The first one is in terms of the sector allocation. You can see that our overwhelmingly the portfolio is positioned without exposure to discretionary retail expenditure. So we have the overwhelming majority of the portfolio in office, industrial and convenience retail. The second point is that the metrics, so $1.2 billion worth of property at a weighted average cap rate of 6.7%, a weighted average lease expiry of just under 8 years and 98% occupancy. So we continue to believe that our real estate holdings are well positioned, both from an ongoing invest income generation perspective, but also as far as their risk profile. On the following slide, we have outlined our investment origination activities for the year, and we continue to be active in the search for new opportunities to deliver our client base strong risk-adjusted returns. We've looked at over $2 billion worth of individual property acquisition opportunities and transacted on $151 million worth of real estate in the period. So we continue to believe that commercial property remains well placed, and we continue to believe that we will be able to execute on these growth opportunities. I'll now pass back to Michael for some comments on our statement proposal and the balance sheet composition.
Thanks, Tim. So turning to the stapling proposal on slide 14, further to the 17th of May 2019 update provided to shareholders, APN is continuing to progress this restructure. As the previous shareholder approvals to implement the proposal have now elapsed, documents are being prepared to seek renewed shareholder approval for this transaction. It's worth noting that the rationale for this proposal and its potential benefits remain unchanged. It brings the group's capital structure in line with its listed peers, offering the potential for an improvement in our cost of capital, and that will allow the group to further grow its funds under management and its profitability. We will continue to keep the market informed of progress. Turning the page, on this slide we've outlined for shareholders one way that is commonly used to assess the value of our business and funds management platform. What this shows is that taking into account the net tangible assets of the group of 40.2 cents per share and APN's 30 June 2019 market price of 50 cents, the market implied value of our $2.9 billion funds management platform is $30.8 million, representing just 1.05% of funds under management. On that note, I'll hand back to Tim to run through the outlook and guidance for FY20.
Thanks, Michael. So look, fundamentally, in terms of the market, with a cash rate at 1% and the Australian Commonwealth Government 10-year bond yield at less than 1%, we continue to believe that commercial property as a source of reliable cash income streams to investors is ideally positioned. APN now is a $2.9 billion commercial real estate investment management platform. We have a very solid earnings base across our 4 divisions with our listed and unlisted commercial property funds. We believe the real estate we own is well positioned and our funds are well capitalised for further growth, and the balance sheet of us as the management company is in excellent shape with $15.7 million of cash, and we have strong alignment both with our shareholders and also with our investors, with over $120 million of investments in our funds. So we see that we are well placed to deliver further sustainable growth. On slide 17, finally, in terms of our dividend and our guidance, the board over the course of the year has reviewed market practice and also canvassed shareholders' views on what would be most helpful going forward for investors. And as a result of that, we have concluded to move to provide dividend guidance exclusively moving forward. With this, we have confirmed that our full year dividend will be 2.75 cents per share, which will be partly franked, and the board has also determined to provide a statement that it believes that the dividend is sustainable at this level moving forward, subject to a continuation of current market conditions. Thank you all. At the end of this presentation, we believe the company remains very well positioned to grow moving forward, and I just wanted to close with a final note of thanks to Michael Growth, our Chief Financial Officer, who will be departing the business between now and the end of calendar year 2019. Michael has been with us for 13 years, as a number of shareholders will appreciate, and has been a significant contributor to the growth and the success of the business to this point. So I just wanted to thank Michael for his contribution and wish him well for the future. That now brings to a close the formal part of our presentation, and I'll now hand back to the operator for any questions that you may have for us. Thank you.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Hamish Burns. Please go ahead.
Hi, good morning, Tim and Michael. Firstly, congratulations on another fine result. If I could just ask, firstly, within the listed securities, it's been a strong year for the Asian REITs, sort of now at 50 million, as I think Tim commented. Would it be fair to say that it's kind of reached a size that you're getting inquiries from institutional investors? And I guess a secondary question is, does the Asian REIT track the growth trajectory that the APN A REIT took at a sort of similar stage in its life cycle?
Yeah, thanks, Hamish. Look, I definitely think that, yes, there has been some inquiries from institutional investors on our Asian real estate security strategy. There's a couple of reasons for that. I think the first one is that the addressable universe of investments in the Asian listed property space is much larger than the A-REIT sector. So larger number of markets, larger number of asset classes. It's roughly 3 times the size of the market cap of the A-REIT index. So yes, I certainly think it's on those investors' radar, and I think also people are attracted to the growth profile that the Asian markets provide moving forward as long-term investors. In terms of the growth profile and the trajectory, we would have seen a steeper trajectory earlier on with the A-REIT fund, and I think a couple of the reasons for that is that rightly or wrongly, I think investors view the Asian Real Estate Securities Fund as more of a niche or a specific opportunity. It doesn't probably fit as neatly into an allocation for domestic real estate and international real estate. And it's also taken us some time to win the necessary research ratings that we're now well on track to do. And that's a significant driver of inflows through our distribution channels that require independent research to have the fund available on RAPS platforms and those sorts of channels. So we're certainly optimistic about the trajectory of the Asian REIT fund, though. So hopefully that answers your question.
Yes, it does. Thanks. And more broadly, the listed securities you mentioned was down slightly for the year, or no, it wasn't down. Sorry, the outflows were down 54 million. Does APN report inclusive of institutional flows? And if so, does that mean that there was a outflow in terms of retail funds?
Basically that's figures an aggregate figure across all investor types. So yes, there was some that reflects some retail outflows. Hamish, what it also, in terms of the composition, you would have seen, and this is all sort of public because it's available through our website, but in the month of June there was a fair amount of profit taken. I think it was roughly $20 million that came out. So the AREIT sector's obviously had a very strong performance for the year, so that was certainly a factor. But as we also mentioned, a couple of those distribution channels with the outcome of the Hayne Royal Commission findings have certainly experienced some challenges. So those are the two reasons we see.
Sure. Okay, thanks.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. We'll now pause momentarily if anyone wishes to register. There are no further questions at this time. I'll now hand back to Mr. Slattery for closing remarks.
Look, thank you all for dialing in and participating in the call. Please feel free to contact us if you have any further questions, and thanks again.